Thank you everyone for attending. My name is Alfonso. I'm co-founder of WiseCost, and I will be presenting this webinar series today. We are really happy of all the interest this training and this webinar generated. We got a lot of questions, and the goal with these webinars is that you have your practical knowledge to assess your accounting system from a DCAA compliance perspective. So we want you to leave this call knowing exactly where your accounting system stands and what to fix first. Before we get to the agenda, I want to thanks to all the partners that made this possible. We are working and we've been working with Wendroff and Associates, which is a CPA firm from Arlington with a deep government contractor experience. Sarah, a manager from the firm, is here with us to provide some of their knowledge and their experience. Also, a big thanks to Station DC and Mission Cultivate, who are two organizations that support this community of contractors, and they've been really near working with us. So thank you to them also. I'm going to quickly introduce today's speakers. Sarah San, as I just mentioned, she's a CPA and manager at Wendroff and Associates. She has a master's in accounting from the George Washington University and a lot of experience really in small business and government compliance. Sarah will walk you through the technical content today and will handle most of your DCAA compliance questions. And from my side, I'm the co-founder of WiseCost. WiseCost is a DCAA tool. And well, my background is mainly in tech and in accounting automation. I've been working the last 5 years in automating accounting procedures for US clients. Full disclosure, I am from WiseCost. I'm the co-founder of WiseCost, but we prepare this session technical first and not as a sales pitch. We really wanted that you take a lot of knowledge and the information for you to start this journey. So, well, you will see in the next slides. One quick note, Brian Wendroff, who is the firm managing partner, he couldn't join today due to a personal matter, but he will be in great hands with Sarah. But he sends also his regards to everyone. I will give an overview of the agenda and then I will just handle it to Sarah. We will start today's session with explaining what is the DCAA and why it matters for government contractors. Then Sarah will follow with explaining what the DCAA normally looks for. Follow up, she's going to explain the SF 1408, which is the main framework the DCAA uses for analyzing the level of compliance that you have in your company. And to finish the technical part, Sarah will explain which are the most common errors or gaps that government contractors have in their accounting systems. Then I will finish with a practical demonstration. I will go over the different tools that we have available for running our accounting systems in a compliant way, and we will finish the session with a Q&A. Again, thank you all for being here. Thank you, Sarah, especially for your presentation, and it's all yours.
Okay, thank you so much, Alfonso, and thank you so much for everyone joining us today. My name is Sarah. I'm a manager at Wendroff and Associates, and I specialize in small business accounting and government contractor accounting. So today I will share some technical content regarding the DCAA readiness and DCAA compliance. DCAA is short for Defense Contract Audit Agency, and it is the agency that audits government contractors. We can start with a simple question: why does DCAA compliance matter in the first place? A lot of contractors would assume DCAA compliance only becomes important after they've won a contract. But in reality, readiness often starts much earlier. The government wants confidence that the contractors can properly manage contract funds and also accurately track costs. That's really what DCAA is evaluating. And one thing I wanted to emphasize is that an adequate accounting system is much more than an accounting software. It is actually a combination of the accounting platform, your company's policies. So basically, the DCAA compliant, it's just a combination of the platforms, policies, and timekeeping practices and your internal control all working together. And if those pieces are not working together, if a government contractor is not DCAA compliant when they're required to, the contractors may experience delayed payments, question costs, contract administration issue, and possible challenges when they're pursuing future opportunities. There's also another side to this. While the same system can support DCAA compliance, it could also help the management team understand their profitability, the labor distribution, and their contract performance. So through today's discussion, please think about the DCAA readiness or compliance not just as a compliance exercise, but also a business management tool. And next, we can look at why contractors should be thinking about DCAA readiness even before they win a contract. The first reason is what I would call a gatekeeper effect. For certain opportunities, especially for a cost-plus contract, the contracting officer may want assurance that the government contractor's accounting system is capable of supporting the government requirement. And in many cases, they will require the SF-1408, which we're going to cover shortly, to be filled out before the contract is awarded to them. So in a way, being DCAA compliance could be the beginning to win a contract. And secondly, many clients will be like, we are not going to pursue a prime contract. We can just be subcontractors for those prime contractors. But now we have been seeing many prime contractors also expecting their subcontractor to have a good accounting practice or system. They could be DCAA compliant. So when their contractor officer are requesting information from them, they can pass that along to those subcontractors and make sure the sufficient information can be provided. So even if you're just pursuing subcontract opportunities, being able to be DCAA compliant and demonstrate readiness could also be a competitive advantage. And thirdly is readiness will take time. It's not like you can build a compliant timekeeping procedure or labor distribution process or establish a method to allocate indirect costs to different projects just overnight. So you wanted to get ready before the opportunity actually arrives. And so the main goal is more to be ready and be prepared. Now that we know DCAA compliance is important for a government contractor, even before they win a contract, we can see exactly what DCAA is looking for when they evaluate a contractor's accounting system. Actually, we asked the exact question to a DCAA auditor. Like, does DCAA have a preferred accounting software? And the answer was no. So DCAA actually evaluates the system's capability and compliance, not the software brand. And in fact, there's no such thing as a DCAA-approved accounting software. So they don't really care whether a company used QuickBooks Online desktop or Deltek, Uninet, or any other platform. What they care about is whether your accounting system can produce reliable and supportable contract cost information. For example, can you separate direct costs from indirect costs? Can you track costs by contract? Can you support labor charges? Can you maintain proper documentation? Those are actually the questions that matter. And when we talk about contract costs, every cost must meet certain requirements before it can be charged to the government. The Federal Acquisition Regulation, FAR 31st, provides the framework for a government contractor to determine whether the costs can be charged to the government. And there are four main concepts: allowable, allocable, reasonable, and supported by documentation. So for allowable, some costs just can't be billed to the government by rule. The examples could include entertainment expense, alcohol or lobbying, and advertising. So we need to make sure the costs we build are allowed and then allocable. So a cost must benefit the contract being charged. For direct cost, it's more straightforward. If this cost is used directly to support a contract, those are direct costs and are charged to that cost. But for indirect costs, it could be more complicated, where DCA actually requires the business or government contractor to have a logical and consistent methodology to allocate indirect costs to different direct contracts based that they are actually benefiting. And for reasonable, just to think about what a prudent business owner will incur such expenses under a similar situation or circumstance. So any inflated or excessive costs are not allowed. For example, if the business needs to purchase a vehicle, a regular vehicle like a Honda might be okay and reasonable, but definitely not if you're going to purchase a Lamborghini. So, and the fourth is supported by documentation. Every cost will need to be supported by documentation to be charged to the government. And the documentation could include invoices, receipts, contracts, payroll records, or timesheets. And now that we understand the main concepts of what costs are allowed, and then we need to see how we need to set up the accounting system or how to determine the accounting system is adequate to properly track those costs. The primary framework is Standard Form 1408. So many of you may already heard about SF 1408. It stands for Pre-Award Survey of Prospective Contractor Accounting System. It is a standard government form, and DCA uses the form to assess whether a contractor's accounting system is adequate to support government contracting requirements. This form is actually not required for all government contractors before they are awarded by a contract, but it is widely used, especially if this is a cost-plus contract. And also, I think this is a very useful, important document for a contractor to review before they ever get any contracts, because the form clearly outlines what the government expects from an accounting system. It checks the system's design, not its operation. So I would say the government contractor can actually use the form SF 1408 to be a roadmap to determine whether their accounting system is compliant with the DCAA requirement. And now we can take a look at the SF 1408 checklist. So this is a screenshot of the form. Basically, it's a simple checklist, and DCAA is or the government is outlining some key point that they're expecting the contractor's accounting system to be able to achieve. And we summarized some key areas on this checklist to the next page here. And here are some details which we believe is very important, which are segregation of direct and indirect cost, and identification of direct costs by contract, timekeeping control and labor distribution, accumulation of costs under general ledger control, indirect costs properly allocated to contracts, and ability to exclude unallowable contracts. So you probably are wondering how you could set up your accounting system to meet these DCAA requirements. And also, how will your financial report, and probably more specifically profit and loss report, will look like once you have an accounting system to be DCAA compliant? We have a very simple comparison for profit and loss here. This is a simplified set of profit and loss report. So basically, on the left-hand side, it could be a traditional profit and loss report used by many small for-profit organization or business. It will start from the company's gross revenue and subtract different types of expenses like salaries or business rent or travel expense, professional fees, and then the bottom line is net operating income. But once you have an accounting system, well, in this case, it's more like for a QuickBooks Online report purposes. Once you have that system ready, the report will look a little different. And right here, we are showing a sample report called Profit and Loss by Class report. QuickBooks will be easily generate such report once you have the system or DCAA compliant system set up. And there are two things that the government contractor needs to set up. First of all is a DCAA compliance set of chart of account. We're going to go through more details of the DCAA compliant chart of account in our next session. But just as a brief overview, basically it will start from the revenue on the profit and loss, and then the next section is direct expenses, which in our example here, it's just direct labor. And then following that, there is an indirect expense section. In reality, the indirect expense section could include a lot of different expense account names under a few different indirect expense pools, which could include a fringe expense pool, an overhead expense pool, as well as a G&A expense pool. And after all the indirect expenses, the bottom line is net operating income for the company. So you can see that by implementing the chart of account, you will be able to separate direct and indirect cost in your accounting system. And the other part that is good to be set up in QuickBooks is called a class system. By enabling the class function, basically you could trace your cost by your final objective. The final objective could be your different contracts, your projects, or it could go as detailed as even a purchase order. So however detailed you want to track, say the revenue or the expenses by those projects or objectives, you can set them up as classes. And this is how you will be able to identify direct costs by contract, is by when you adding those costs to the accounting system, assign them to a particular contract. And one more column we have here is a indirect column or indirect class. So for now, indirect expenses are temporarily stored under this indirect class, which we can talk about how it will need to be allocated to the project shortly. But this profit and loss by class report will be able to show you how your financials look like with a segregation of direct, indirect cost, as well as identification of direct cost by contract. Well, assigning those costs in most cases is more like straightforward. Let's say if this is a direct expense, it will go to the direct expense category. If it's an indirect expense, such as office rent or business insurance that benefited the whole operation of the company, it will go to the indirect expense category. What could get complicated is about labor distribution. DCAA also requires the government contractor to have a proper timekeeping control and do the labor distribution. So labor is typically the largest cost category for service-based government contractors. And from our experience, many small government contractors, they are service-based. And it is also one of the most heavily scrutinized area during a DCAA audit. So here we have a flow of a proper timekeeping and labor distribution process that DCAA expects. So just we are just sharing some concepts here. So generally speaking, the first step is employee need to enter their time on a daily basis. And this includes all of their time, either the time they directly support a contract or any indirect labor hours, which could be, say, a paid time off or a sick leave, or even a G&A, general administrative time that they spend attending an internal meeting. And after the employee enter their time, the supervisor will need to review and then approve the time entries. And after time entries are all approved, now we come to a pretty important step, which is labor distribution. So the labor or wages costs will need to be distributed based on how employees actually spend their time. So we have a quick example here. Let's say if an employee's salary for a certain period is $100. This is definitely a little low, but we just wanted to show a quick example here. And the employee entered the time as 40% to support project A directly, 40% to support project B directly, and 20% of the time is the G&A time that they spend to write an internal procedure or attend an internal meeting. And those costs, the wages of $100 will need to be allocated to different cost pools based on the time entry, which in our case will be $40 listed as a direct labor expense charged to project A, and $40 as direct labor expense charged to project B, and then $20 charged to G&A labor expense, which will be temporarily stored in an indirect class column, which we just showed. And all of those allocations will be flowed into your accounting record and financial reports. And then after all the direct and indirect costs are separated, direct costs are allocated to contracts. The DCAA also requires indirect costs to be properly allocated to the contracts. DCAA requires the allocation method to be consistent and logical. So for most government contractors, they would use direct labor or direct expense as the driver of the allocation. So on the left-hand side, you can see that it is a profit and loss by class report that we just showed with revenue, direct labor allocated to project, where indirect expenses temporarily stored in an indirect class column. And then we are going to allocate this indirect expense based on the direct labor percentage of each contract divided by the total direct labor percentage, and allocate those indirect expenses to each contract. And in this way, we believe it will show each contract is bearing a fair share of indirect expenses that the company incurred during the operation of the business. And after that, you can see this also shows a true picture of each contract's performance. So for contract number 1, you can see that after allocating indirect expenses, it is actually doing pretty good. It has a net profit margin for 18.5%, while contract 2 is pretty much break even. So these reports can not only be used for compliance purpose, it is also a pretty powerful tool for management to evaluate the performance of each contract, and also possibly adjusting the bidding strategy for future contracts. For example, project number 2, it is currently break even, then the company may think about, okay, in our next bid, we probably need to increase the indirect rate charged to possibly make more profit. And we just discussed what a accounting system should look like to be DCAA compliant. And then now let's see what are the common areas that many contractors would fall short. So when those contractors are struggling with DCAA compliant or readiness, it's usually not because of the accounting system design is not correct. It could also possibly because the day-to-day process are not being followed consistently. One common issue we saw is that the employee will only record the billable hours. And if that's the case, without the time entry for all direct and indirect hours, the indirect cost pools will not have the correct information. So then the allocation of indirect cost will not be correct either. And another issue is fragmented systems. So it's very common that the company's timekeeping system is in one platform, and then they process payroll using a different vendor, and then their accounting record is in another software. So when someone tries to follow the trial, it would become difficult to reconstruct the whole story. We also see situations where the records are edited and deleted without preserving history. So DCAA generally would expect an audit trial to show what is changed and when it was changed and who made the changes. So the audit trial itself is really important. And finally, we often see direct costs, indirect costs, and unallowable costs sometimes mixed together in the chart of account. So if the accounting structure cannot separate those costs, the reporting will become much more difficult. The good news, though, is that all of these are solvable problems. Many contractors, they already have the necessary pieces in place or necessary tools, but we just need to find out a way or create the procedure to connect all those pieces together. I'm going to pass it back to Alfonso to discuss what are the next steps.
Thank you very much, Sarah. That was really clear. So from my side, we saw most of the most important technical aspects of being and having an accounting system in a compliant way. So what I'm going to do is I'm going to try to take these concepts and do it in a practical way. I will start talking about which are the 2 things that you can start doing the next week. And we are going to provide you with the tools so you can do it quickly and in a very friendly way. So the first one is assess where you stand. So it's really natural. Thing you need to do is to assess if your current system is aligned on what the DCAA is requiring to. And for that, we are going to provide you to a self-assessment checklist. We are also going to give you the SF1408. And with that tool, you are going to be able to check where are you in this process. The second step is, of course, fixing that gaps. In this checklist, we are going to give you a result on where you are. You can do it also with the SF1408. We just did it in a more simple way. So when I was thinking what to tell or how to put this content in practice, I thought that the best way of telling this, of showing how to run a labor distribution, which are the tools that are available, is to tell the WiseCost story. So as I told you before, I'm the co-founder of WiseCost, and I started WiseCost with Brian, who is a CPA with a lot of experience with government contractors. And the problem we saw a few years ago was this one. The DCAA requires that government contractors have their accounting system in a very specific way. More than 90% of government contractors, especially small and medium, are using QuickBooks, and QuickBooks is a great tool. It's really friendly. Also, most of CPAs know how to work with QuickBooks Online, but QuickBooks don't have the tools and the capability to provide you an accounting compliant system. So normally what we were seeing, or what Brian identified, is that when government contractors start growing and start selling either to prime contractors or directly to the government, they needed to migrate to very heavy ERPs like Deltek or Uninet. These tools are really robust, but they are really expensive. They are not user-friendly. There are only a short amount of CPAs that knows how to manage these tools, and an implementation can take from 3 to 6 months to over a year. So this was a really pain point for small and medium-sized government contractors because it was mostly an overkill. So when we identified this problem, we went to look other tools in the market, and we could organize these solutions in 3 clusters. So we have these heavy ERPs that maybe you heard about, Deltek, Uninet, which are not compatible. Like you can't use these ERPs and QuickBooks Online. Then you have regular time trackers, which can be in a DCAA mode, only the logs and the approval processes, but they lack of the ability of running the labor distribution, which is, as Sarah mentioned, is one of the key pieces of DCAA compliant processes. And then you have the accounting softwares like QuickBooks Online, which they are great, but they are not prepared for a compliant audit. So we think and we design a 4th way, which is designing a layer that works on top of QuickBooks Online. So what we develop is a platform where you connect to QuickBooks Online. You don't need to migrate your whole system, and you can run with a whole audit trail all the process of tracking time, approvals, running the labor distribution, and creating the labor allocation in the general ledger. So I'm going to run a demonstration on how you can do this. I think this is going to be really useful whether you use or you don't use WiseCost, because it's the same process you need to do in a Google Sheet, in your own software. So, well, as I was saying, in WiseCost, the 3 steps you need to follow are really simple. When you create a WiseCost account, you connect your QuickBooks account. We will migrate in 2 minutes all your information from QuickBooks Online to WiseCost. We've run all the compliance and security process with QuickBooks Online. So These partnerships allows us to connect directly with your account. Then you can just invite and you onboard your team, which can take a couple of minutes, and then you just go compliant by approving timesheet, running labor distribution, and posting the journal entries. So what I'm going to do now is I'm going to follow these steps that Sarah mentioned before. So I wanted them to remind it. So first, an employee needs to track their time. Then it needs to be approved by a supervisor. Third, you run the labor distribution. So you allocated the wages and salaries in the different contracts, and then you post that information in the general ledger. Everything with an audit trail, which should be auditable. So I'm going to change tabs and I will go to WiseCost. So in WiseCost, we have two main users. We have the admin user, which is the person in charge of running the labor distribution, setting up the account, approving timesheets, and basically setting up the account. This user can be an external user like an accountant, a CPA, or it can be an internal company user. So we have a few tools for business intelligence because, as Sarah was saying, this is not only important from a DCAA compliance perspective, but also from a business perspective, because the end goal is to know if a contract is, how is a contract doing? So that's the end goal, including the indirect cost and the labor cost. So here, what we have is all the information, the time activities the employee posted, the timesheets. As you can see, we can reject or approve all the timesheets that were submitted by the employees. We have the payroll periods. So each timesheet should be aligned to the payroll period. We have the labor distribution, which we will run in a few seconds. The journal entries we already posted. So you can see here, we will see this in detail, but you can see here all the journal entries that we prepared. And then we have the company setup, which if you are already familiar with QuickBooks Online, you will see that all these categories are categories from QuickBooks Online. Because the good thing about WiseCost is that you don't need to create anything. So setting up an account in WiseCost can take 5 minutes, 10 minutes, depending on how well structured is your information in QuickBooks Online. So you have, for example, employees. All these employees are the employees you set up in QuickBooks Online. And if you want to onboard them, you can just click here and onboard with his email. You have all the classes, which is the object we use to identify contracts. We have the chart of account, in which we will go deeper in the next session, the customers, the item, and one of the most important pieces, the audit trail. So this is one of the most important pieces in an accounting system. Everything you do should be auditable and should have a trail that nobody can modify. So one of the mistakes we were seeing in government contractors is that they were using, let's say, Clockify for tracking time with the correct approvals and processes, but then they would export that information and they would run the labor distribution in a Google Sheet and then send it to the CPA. And in that process, when the auditor asks you for the trail, you don't have every movement registered in an immutable way. So this was only a quick overview. The other role or user is the employee user, which is a really simple and modern time tracker. You can create time activities. You have timesheets with different status. In this case, we have a logged, an approved, and a pending timesheet. The pending is because we send it for approval, but the manager didn't approve it yet. You have a clock. Well, I'm not going to stay too much in this user because I think most of you, or probably all of you, used a time tracker in the past. But going back, let's go from creating a time activity to running the labor distribution. In this case, for example, I cannot create a time activity for this period because this is already pending. And one of the compliant rules is that, well, you shouldn't be able to modify after you send it. So if you go to timesheet and you want to run the labor distribution for this period, what you need to do is you need to select the period, we're talking about June, and you need to approve all timesheet. In WiseCost, you can do it in an individual way, or you can do it, you can review here each timesheet, or you can do it all in a bulk. So once you approve all the timesheets and these are all approved, you can run the labor distribution. Again, the labor distribution is the process in which we allocated the wages of the employees in the different contracts. So as you can see, we have 2 periods that are available for allocate. We can start with May. And when you click, well, in WiseCost, we run a health check to make sure that everything is aligned. So we have different smart algorithms that check for anomalies or outliers. And in this case, everything is okay. So you review and adjust, and we tell you how much is the amount per period per employee. These steps are the same steps you need to follow if you are not using WiseCost. So I think this is important. We are calculating the hourly cost by dividing the pay per period by the total amount of hours. And in this case, for the DCAA, it's really important you divide that wage and that salary for the effective hours and not for the total hours. So if your employee is working 40 hours per week, you shouldn't just divide the wage by 40 hours per week. You need to divide by every hour that the employee registered in the time tracker. And this is a really important point. In this case, you can also add adjustments, so sometimes you have a bonus, another tax, or other stuff, but we will go with a more simple way. So if we go to the next step, as you can see, in only 2 seconds, WiseCost calculated the amount per contract. So what we are doing here is we are grouping all time activities from this period by class and employee. So in this case, David Kim has 1, 2, 3, 4, 5 rows in a journal entry in which we allocate part of his salary in the different classes, in the DoD contract, in the DHS contract, as well, in some BMP or PTO. So, and we are doing the same with all the employees. So this is something you would like to see in the output of a labor distribution process. And if we go to the next step, you will see that each of these lines has an account. We configured, and also we have a smart algorithm that recommends you a different account. Most of these accounts are direct labor. So all the billable hours that your employees worked should be flagged as direct labor, or should be labeled as direct labor. And then we can use other type of accounts. For example, we have BMP labor, we have PTO, and those are the main accounts we are using to classify employee or labor costs. And then we have like a credit account. But as you can see, everything is already done and it's really fast. And if everything looks okay, you just post this in QuickBooks Online. So these 3 steps are the steps we saw in this slide: employee log time, supervisor approval, labor distribution, journal entry. These are the 4 main steps of how to classify labor cost, which is one of the most important part of a DCAA compliant system. And if we go to see my journal entries, we see the last one. We also can click here, and this is going to take us to QuickBooks Online, and we will see the journal entry we just posted. As you can see, we have the name, the class, the description. And if we go to profit and loss by class, we have each class with the direct labor allocated in the different classes. If you would add other type of costs, let's say materials or other transactions, this would be also in this P&L classified, and that would be integrated to QuickBooks Online as you usually do. So we are adding all the compliant layer that QuickBooks doesn't have. So I'm going back to the presentation. So to finish, I want to summarize what we saw today. So we started with technical explanation from Sarah of what the DCAA is looking for, what is the DCAA. We saw the SF 1408. We saw how those requirements translate to a practice accounting system. We understood how labor distribution is one of the most important pieces, not only to allocate direct labor, but also we are using that distribution to allocate indirect costs. We saw a demonstration, a practical demonstration on how you can manage and how you can get to a compliant accounting system using WiseCost and QuickBooks Online. So in our next sessions, we will go deeper in the chart of account. So we will speak there on how to classify other materials, not only labor, and we will provide you also with a DCAA compliant chart of account. And in the third one to finish, we will go deeper in how to survive a DCAA audit. So we will be very transparent on how really is a DCAA audit and how can you pass it, basically. So thank you very much. One last thing, if you are a CPA working with government contractors or you are a government contractor, you can write to us with any question. You can reach out to me if you want to try WiseCost. We have a free trial and we will give 3 months for assistant of this webinar. So please, if you have any question, any comment, just let me know and we will finish with a Q&A. If you have any question, any comment about what we saw in the last hour, please, you can write in the chat. Okay, we have the first question. Can a small government contractor lose an existing contract if they fail a DCAA audit mid-performance?
So,
Yes.
I mean, we will probably need to double check on that, but based on my understanding is basically the DCA auditor, when I spoke with them, their goal is not to have a small government contractor to fail a audit or like to just terminate their contract, but it's like they're trying to have a win-win. They wanted to make sure you have the proper system set up. So I do believe in the beginning, the auditor is going to help assist with the small government contractor, especially during a meet performance, to kind of achieve. And if there is anything that needs to be improved, they could help. They could like provide instructions for you to improve to kind of meet the DCA requirement or pass the audit, instead of they just feel like, oh, you don't have an adequate system and then terminate the contract. This is my understanding.
Yes, and I can add to that question. Of course, there are multiple cases, but when we start working in this, we did research and we found out there are different reports that every year there are more than 5 billion costs that are that fail in audit. So there are different methods the DCAA uses, like penalties, or even they can go up to canceling a contract. So do subcontracts also need to comply with DCAA timekeeping requirements? I would say that depends. I don't know if Sarah, you want to add something. So we have a question that is: do subcontractors also need to comply with DCAA timekeeping requirements? I can tell from our experience. In fact, we are just developing a new functionality in WiseCost, which is specifically addressed for subcontractors of prime contractors. And we know that many prime contractors are asking to their subs to deliver timekeepings in a very specific way. But yeah, I don't know if Sarah, you had the same experience, but depending on the prime.
Sure. So I can chime in here. So basically is like many subcontractors actually they are not required to be DCA compliant. And in that case, let's say they don't even need to keep a accounting system to be adequate to, say, allocate costs, or then not to mention about labor distribution. So it's not like necessary they are required, but usually it will be recommended, because by like ensuring that the business follows the timekeeping requirements, you will not only be prepared for any future contracts if you are required to be DCA compliant in that contract, and you will have kind of a true picture to evaluate the performance of each of your contracts. So to answer your question, in most cases, it is not required, but it's just recommended.
Thank you. And we have our last question, and we only have 1 minute more, which is how long does something like WiseCost actually take to get running? We don't have an IT team. So actually, it's a great question. WiseCost takes probably less than 1 minute to start using if you are already using QuickBooks and you have the structure in a compliant way. That means that you are already using classes. If not, it can take a few days or weeks, but it's also easy to structure. But WiseCost is prepared, so you can start using it very fast. You just connect WiseCost to your QuickBooks. We will migrate all your information in just a few seconds, and you can just use it in the next days. So yeah, thank you everyone for being here. Thank you again, Sarah, and thank you to all the partners for supporting us with this session. And I hope I see you in the next 2 sessions. Okay.
Thank you.
Bye.